All I'd add, as you can imagine, compliance is, a large concern and concept at a firm like Fidelity. And, we're of course being cautious with limited rules where we have them and rules as we gain them. But we're being intentional as well and really trying to meet our customers where they are and what they want from us. As the theme of this conversation somewhat is on the due diligence side and, where that institutional adoption is going. It's started to be clear. Like that is happening in real time in many different ways, but it's still really, really early. So there's something about not getting over your skis with things that maybe your customers at scale aren't even demanding quite yet anyways. And I think on a lot of these topic areas, we'll get there, right? It's just about when is sometimes someone's best guess. And that's okay too. It's about, in the meantime, for a firm like Fidelity, especially, we have plenty of work to do with the limited things that we already have available to us. So it's not for a lack of, opportunity. It's, filling that in every single day with customers, prospects, et cetera.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, we're going to be going over some substantiating evidence that banks and financial institutions are for a fact on the brink of entering aggressively into the digital asset ecosystem, going over some ongoing developments that have taken place in recent days. And then I also want to bring to everyone's attention something very interesting that I am paying very close attention to in terms of technical analysis and historical precedents that we have not seen since 2022 back in May, which we'll go over here in just 1 second. So with that being said, sit back, relax, enjoy today's video breakdown. As you guys heard the gentleman say, starting off the beginning of today's video breakdown, that was Ryan Lessard from Fidelity Digital Asset Investments. And he went on to specifically say that institutions are coming. We are still early. They just need the regulatory green light. So considering that we are in a market pullback right now, or a slight downturn comparative to where we were at just a couple of months ago back in October, now is not the time to be fearful. Now is the time, in my personal opinion, to be positioning yourself for the long term. When the market does recover, the market stops bleeding and the optimism sparks and comes back into the total cryptocurrency market. I said here for you guys, banks aren't ignoring crypto. They're waiting for the last pieces of regulation to fall into place. And according to Senator Loomis, she just recently said at a blockchain summit that the Bitcoin crypto market structure bill is about to pass in the next 2 weeks. As of time of recording this particular video breakdown, it is December 11th. This is from December 9th. Now, I've always been an advocate before I play this particular video breakdown for you guys of hoping that at some point in time in the future, crypto assets decouple from traditional assets and the broader risk-off sentiment that we've recently experienced due to us having, or financial institutions having, regulatory clarity for the first time in history. And you can see the date of this Blockchain Association Summit. This was from December 8th through the 9th. So this was relatively recent. She's saying in the next 2 weeks, this is all supposed to come into fruition. And I've been an advocate of also mentioning that after this legislation is passed, there's going to be an implementation phase. And that is most likely going to take place at some point in time in Q1 to Q2 2026. So just be mindful of that. Now, coming back to this post, just so that way you guys have an understanding of what these banks and institutions still need clarity on. Tax rules for staking, airdrops, and bridging, the SEC versus CFTC jurisdiction, stablecoin and market structure laws, updated BSA and AML rules for on-chain finance, tokenized deposit plus real-world asset custody standards. Once some of these things are finalized, banks can enter at scale. And that is when real capital flows. And this information is being pulled from the Global Crypto and FinTech Regulatory Update from 2025, shared inside the private CYPRX research channel. Now, to go over some ongoing breaking developments that took place in December that scream institutional adoption is coming in the digital asset ecosystem, here I reposted the CFTC has officially launched a US digital assets pilot program allowing Bitcoin, ETH, and USDC. For now, I'm going to go outright and assume that once regulatory clarity is passed, this list will broaden, but these assets can now be used as collateral in this pilot program in a regulated derivatives market with clear guardrails, real oversight, and full regulatory clarity under the Genius Act. So let that sink in. This isn't speculation. This is institutional grade integration of digital assets into the US financial infrastructure. For the first time ever, Bitcoin and Ether are acknowledged as usable collateral inside the CFTC regulated markets, which is huge. Stablecoins like USDC are recognized for margin, settlement, and risk management. Tokenized real-world assets like US Treasuries receive explicit guidance. Outdated restrictions have been removed, and 24/7 markets are now a US reality, not just offshore. This makes digital assets no longer outside the system. They are now being embedded into it. And you can see this is also from December 8th, give or take the same day of the Blockchain Association Summit, where Senator Loomis was just speaking, that this was announced by the acting chairman. And it says here, today marks an important milestone in the history of the crypto industry. We're going to go and get into historical technical analysis here in just one second, but that just goes hand in hand with what I'm going to show you guys, where we have been given regulatory certainty for the future, said Chris Murzalak, the co-founder and CEO of Crypto.com, in regards to this announcement. Acting Chairman Pham said, today, I am launching a U.S. digital asset pilot program for tokenized collateral, including Bitcoin and Ether, and our derivatives markets. Mind you, again, the derivatives markets are measured in the multi-trillions, if not quadrillions. This establishes, clear guardrails to protect customer assets and provide enhanced CFTC monitoring and reporting. So, huge announcement. Now, that was not the only massive announcement from December. In the same time frame, the day after, December 9th, the Office of the Comptroller of the Currency released this statement. The OCC, as of December 9th, 2025, confirms banks' authority to engage in riskless principal crypto asset transactions. Coming over to the document and reading two of the most bullish statements, it goes on to say, offering riskless principal crypto asset transactions would benefit bank customers, by providing customers with more options and the ability to receive a service provided by a highly regulated bank, which is huge. Customers will be able to transact crypto assets through a regulated bank for the first time ever in history, as compared to non-regulated or less regulated options. It also states that conducting riskless principal crypto asset transactions is part of the business of banking and is permissible for a national bank. So again, these two massive announcements from huge players in the financial ecosystem, December 9th and December 8th, both have set historical precedents. We're now moving forward. We're entering into an era of crypto where there is clear regulatory guidelines for the first time after 17 years in the life cycle of crypto. And after 17 years, us only having reached $4.24 trillion in market cap, can you guys imagine what is still to come? With that in mind, considering both of these have historical precedents in terms of regulatory guidelines in the crypto asset ecosystem, now let's take a look at Bitcoin's price action on the weekly time frame. Something that I've paid very close attention to is this triple moving average and how it has supported Bitcoin's price pretty much ever since the triple moving average crossed over in March 2023. You guys can see by looking at the charts again on the weekly time frame on Bitcoin's price action, the triple moving average crossover has supported Bitcoin's price up until just the other day, where Bitcoin has seen a second triple moving average crossover to the downside on November 3rd, 2025. The last time that this happened was back in March 2022, where you can see prior to that, the triple moving average held and supported Bitcoin's price up until that date, where we had a triple moving average crossover to the downside. The triple moving average turned into a resistance for Bitcoin's price. And that is when we saw a massive sell-off in Bitcoin's price at the end half of 2022. With that in mind, and just taking a look at the current price action, we have now, for the first time since back in 2022, now seen the triple moving average broken below in terms of price action. And the question now is, can this price action flip bullish back above the triple moving average, turn it into support and continue higher? Or for the time being, does the market sentiment continue to sour? Does Bitcoin seek to find lower discounted prices, most likely taking the rest of the total cryptocurrency market cap with it? And does this triple moving average crossover act as a resistance? So what I'm currently worried about is, again, if this triple moving average crossover, just like it did back in May 2022, after price broke beneath it here in this area, retesting the triple moving average and then turning it into a resistance is the same thing. Now that we have broken beneath the triple moving average, once we retest it or aim to do so, does the triple moving average continue to act as a resistance and hold price beneath it like it did in terms of historical price action? And does Bitcoin's price go lower? Or when we do see price retest the triple moving average, do buyers have enough momentum and strength to break back above the triple moving average, create a crossover back to the upside, and hold it as support like it has in historical price action, right? Now, something that I want you guys to take into consideration is that if we do see the latter, which is a deeper retracement on Bitcoin, possibly down into sub 75 to $60,000 per Bitcoin, taking a look at the historical price action, it would actually, on the higher time frame, be a very healthy correction. So just like back here in 2022, when we had the triple moving average, you can see clear as day it acted as a resistance and Bitcoin continued to shed weight. Now, what I want to show you guys is something very interesting. If we take the bars pattern and mimic the current price action of Bitcoin, since for the first time in historical context, on the weekly time frame, Bitcoin has now had a break below the triple moving average, and we take the price action from the top of where the pullback started to where we had this break beneath the triple moving average, it then retested it and acted as a resistance, and we mimic the entirety of Bitcoin's price action from that point, and we take it over to where price action currently stands. You can see clear as day right now, price action almost mirrors that exact same schematic. Here is where back in 2022, we had the break below the triple moving average. So now the question is, as I portrayed to you all, does the triple moving average, like it did back in 2022, since we had this down move that broke the triple moving average, same thing here, we had this down move that broke the triple moving average, price retested the triple moving average. Now, can we see price retest the triple moving average? And the question is, when it does the triple moving average act as a support, trailing price higher with enough bullish momentum to break above and hold it as support? Or does price action mirror what took place back in 2022? And do we see the triple moving average act as a resistance, sending Bitcoin's price action into lower territory, possibly down into 70 to the 60K range? Now, obviously, of course, this is all speculation, and I'm not saying that this is going to happen, but I want to keep you all hopeful, because zooming out, if this same schematic were to unfold and take place, I do believe that it would only be a temporary decline of Bitcoin's price, taking the rest of the total cryptocurrency market cap down with it, and taking out any over leveraged buy positions that have existed in previous cycles, which would be healthy and much needed for the overall health of the cryptocurrency market long term. As you guys can see, that after this pain subsides, we would most likely see a massive recovery. And also, something that I've noticed is in the headlines, a lot of the overall price predictions on Bitcoin come at around 150 to 170,000, where you can see, taking the schematic from previous cycles and mirroring it to current price action puts Bitcoin's price in the not so distant future. So again, I do understand completely that this is speculation, but I am paying very close attention as we're seeing historical context take place in terms of regulation, but also in terms of technical analysis, where for the first time on Bitcoin's price action since 2022, when we had a triple moving average crossover, price retested it, and then the TMA acted as a resistance. Now, for the first time since that era, where price has broken back above the triple moving average and it acted as a support, we have now since then, back in 2022, for the first time, broken beneath the triple moving average. So the question now is moving forward, can we see Bitcoin's price, obviously, of course, taking the rest of the total cryptocurrency market cap with it, break back above the TMA after retesting it? Or do we see it act as a resistance, and do we see Bitcoin's price go lower? So hopefully today's video breakdown enlightened you guys to think, play both offense and defense, as I am personally. Again, not financial advice. I'm well aware that there could still be more downside risk in the total cryptocurrency market, and I'm prepared for that mentally. But I'm also understanding that the vast majority of blue chip altcoins that I personally believe are going to perform extremely well once the market sentiment flips back risk on are heavily discounted right now. So I am taking advantage of these discounted prices while also keeping some capital reserves on the side in case we do see lower levels. With that in mind, many blessings to you guys. If you guys enjoyed this quick video update, do me a favor, smash that thumbs up button and subscribe. We do appreciate the love and the support, and I will see you guys in the next video breakdown.